Joining me is Ted Oakley, managing partner and founder of Oxbow Advisors. Ted, it's good to see you as always. Kind of just a mixed day that we see, not necessarily perhaps any particular direction to be gleaned here from the markets, but one of the headlines that caught me is this one from that I'm reading on CNBC. The Fed in the early stages of a campaign to prepare markets for tapering its asset purchases. When you look at this market, do you think investors are ready for that?
No, Kristen, they probably aren't. I think investors are sort of on autopilot. They have been for the last 6 months. So they're really not thinking about it. Maybe when it happens and they see the rates change on them, it'll have a little more impact. But I find people are fairly naive to what's going on right now.
So when you look at the stock market, the S&P within striking distance of an all-time high, Ted, I'm just wondering, is this a buying or selling opportunity for you?
Well, for us, Kristen, if you'll notice, after they came with the plans for the two rollouts of the big $6 trillion program in early April, if you'll notice, the markets have basically flatlined. I mean, it's hardly any changes in either the Dow or the S&P. A little bit less, a little bit worse than the NASDAQ. But I think what people are seeing is they're saying, hey, I'm not certain about all of this. I'm not certain if I want to push any further into those markets. And I'm not saying they can't make any minor new highs, but for us, what we see right now is they're reticent to push into those right now with what's happening.
Well, the reopen is underway. The vaccine rollout is ramping up. We see people getting out more and more every day, at least here in New York, which did lag other states in terms of the reopen. No doubt about that, with Florida kind of setting a precedent there for a reopen during most of this pandemic. I'm just curious, the economic reopen at any point this summer, Ted, do you think that will be a driver for stocks?
It could be, Kristen, but on the other hand, you could say that some of the stocks have priced it in already. If you look at a lot of multiples on certain stocks, they may have already priced in something that's going to happen. I'm not certain it wouldn't show up more in the commodity markets than the stock markets, but I guess we'll have to see.
Let's talk these meme stocks. AMC up double digits today. BlackBerry, another gainer. GameStop, a gainer on the session as well. I know you probably don't necessarily play in that market, the Wall Street bets market, Ted. If you do, please tell me. But how do you view that as a potential mover of the underlying indexes? How do you view that?
Well, Kristen, thanks, and you're right. We don't own those, so you've got that one right for sure. But for us, no, those kinds of companies we're not going to own, and eventually, they come back to earth at some point. But it does have an impact, though, on things. If you look at what drives some of these things, look at Tesla, for example. They put it in the S&P 500 at almost the worst time, right at the high, and most of that's driven and really the same with AMC and GameStop, all of these. It's driven by the single players. They really get it going, push it forward. I really can't say when that would end. I've seen that happen before. Back in '99 and 2000, early 2000, I saw it happen a lot. But this is it's another time with about the same thing happening.
When we do see the taper by the Fed, going back to my original question, Ted, what is the reaction that you anticipate in the market? We go back to what happened in the wake of the financial crisis when the Fed started to taper then. We saw a pretty sharp spike in bond yields back in 2013, and we know the market can react accordingly. Is it going to give up all of its gains since the March 23rd bottom? I mean, highly, highly, highly unlikely. But what is a pullback or a reaction that investors should be prepared for?
Well, I think there's two parts to it, Kristen. They buy 40 billion of mortgage-backed securities a month. Now that's somewhere it would have an impact, because all of a sudden the mortgage rates would go up, and that would have an impact on residential. The second thing is on the bond side, depends on how much they're going to pull back. They've said already that they're going to take the corporate piece out of there, and then now we'll move over to agencies, and we'll move into all the things they've been supporting in addition to treasuries. It probably depends on how far. If you go from 120 to say 80, maybe, probably wouldn't have much impact. But if they came down to 40 or something like that, that takes a big piece out of the market. I think it will depend on how much they taper it.
And I think that's the thing that we should note here is that, discussions might start in the coming weeks. An announcement might not happen till the fall, for instance, and then presumably maybe at the end of this year, early next year, we could actually see a movement in this direction, right? So the Fed, we know, would try to warn markets as much as possible, as it's done in the past, and that would give time for investors to really kind of digest that. But it could come at the same time that we see a hike in the capital gains tax rate. If President Biden's new infrastructure plan does get pushed through, of course, that's going to be a tax on corporations and then eventually a tax on the wealthiest Americans too. So kind of that timing, I think, is something that we need to highlight for investors. The fact that we could see higher capital gains as well as a taper hitting the market at the same time, is that something that you think could have some pretty steep consequences?
I think the capital gains would have more consequences even than the Fed, Kristen, because what happens is, the Federal Reserve, if you take this whole board and in addition to adding Janet Yellen in, they hate the stock market declines. They'll do anything to keep the market up. And so I don't necessarily believe them on that count, but on the capital gains count now, if they go through with that, as far as the federal government, that has a really big impact, not only on just stocks, but out in the economy and what people are going to do in selling assets. That has more impact than anything else, I think.
Mm-hmm. Let's talk about Biogen. I know it's a particular stock, but huge moves that we see kind of in that space as well. Biogen, the biggest gainer on the S&P, up 38%. Eli Lilly up 10%. Cardinal Health, which plays in a different arena, obviously up 4%. But this healthcare space doing pretty well today. I'm just curious, Ted, when you look at investing sector-wise, is that a space that's attractive to you?
Well, it is for us, Kristen. We don't happen to own Biogen, and we go a little different direction in that we go more toward the pharmaceuticals, in that we own Roche and we own Novartis, Merck, those kinds of companies, as opposed to the biotechs. However, with the advent of so much Alzheimer's, I can see how a stock like Biogen today would really get a boost, based on the fact that it's more prolific every year, it seems like.
All right, a lot of eyes on Biogen today with that 40% pop. Ted, we got to leave it there. That's Ted Oakley, managing partner and founder of Oxbow Advisors. Thank you again.